Welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Engulfing Thrust Hedge. This is a pure price action strategy. There are no moving averages, no relative strength index, no oscillators of any kind. Instead, it relies on raw candles and the classic floor pivot levels. Over the next several minutes, we'll unpack how it reads the market, how it decides to go long or short, how it manages a position with a hedging leg, and how it closes the whole basket. We'll also walk through the actual MetaTrader code and a step-by-step chart. Everything here is for education only, and it is not financial advice. Let's start with the big picture. Engulfing Thrust Hedge is a short-term, price-action strategy that builds everything from the candles themselves. There is no indicator buffer to read. Every closed bar, the strategy looks back over a window of recent candles and calculates the classic floor pivots. It takes the highest high, the lowest low, and the closing price of that window, and from those three numbers it derives the central pivot, which the code calls PP, along with the first resistance pivot, R1 above it, and the first support pivot, S1 below it. The central pivot is the line that tends to separate bullish control from bearish control during the session. The core idea here is that the first clean push through that central line often carries on toward the next pivot. So the strategy waits for an engulfing candle, a bar whose body completely swallows the body of the candle before it, and it wants that engulfing bar to close decisively on the far side of the central pivot. That combination, an engulfing pattern plus a clean break of the pivot, is what the strategy treats as a genuine thrust rather than random noise. Of course, breakouts can fail. Price can pop across a level, trap the traders who chased it, and then snap back. This strategy plans for that directly. If price falls back through the central pivot far enough, the expert advisor opens an opposite leg, a managed hedge, so it now holds both directions at once and can ride the reversal the other way. The combined position is then closed as a basket once the net floating profit reaches a chosen money target, or flattened if the net floating loss reaches a hard ceiling. It's designed for liquid, momentum-prone markets. Think the major foreign exchange pairs like euro, dollar or pound, dollar or gold, on time frames from 5 minutes up to 30 minutes. This style suits a trader who is curious about structured, rules-based price action and who understands that trading always involves risk and that losing trades are a normal part of any approach. Nothing here removes that risk. Now let's walk through the mechanics step by step. On each newly closed bar, the strategy rebuilds its floor pivots from a window of prior candles, set by the pivot loopback input, which defaults to 20 bars. Importantly, that window ends 1 bar before the signal candle, so the pivots describe the structure that existed before any break. From that window, it computes the central pivot, the upper pivot R1, and the lower pivot S1. The distance between R1 and S1 is the pivot range, and almost every other measurement scales off that range. So the rules adapt to any symbol or time frame without hard-coded pip values. For a long entry, the strategy detects a bullish engulfing candle. That means the just closed bar is a green bar whose body fully engulfs the prior red bar's body. On top of that, the engulfing body must be larger than the BreakFrac setting, which defaults to 20% of the pivot range, so the move is meaningful. And the close must land a clean BreakFrac above the central pivot, defaulting to 5% of the range above it. When all of that lines up, the strategy reads it as bulls taking control through the pivot and opens a buy, aiming for the upper pivot, R1, as its measured move target. The short side is the exact mirror. The strategy detects a bearish engulfing candle, a red bar that swallows the prior green bar, with a body big enough and a close a clean fraction below the central pivot. That signals bears taking control, and it opens a sell aiming down at the lower pivot S1. The protective stop is placed structurally. It sits a pad beyond the false break level, so the hedge logic always engages first. The take profit is the outer pivot, R1 for longs or S1 for shorts, with a minimum reward floor set by BreakFrac. Here's the signature mechanic. While the base trade is open, if price travels back beyond the central pivot by FalseBreakFrac of the range, the thrust is judged to have failed, and the strategy deploys an opposite market leg, a genuine locked hedge. From there, basket money management takes over. The moment net floating profit reaches basket TP money, 30 by default, everything closes. If net floating loss instead reaches BasketSlMoney, the whole position is flattened as a hard risk ceiling. Let's read through the code on screen as if we were in MetaEditor. At the top are the inputs. Pivot loopback sets how many bars define the floor pivots. BreakFrac is how far past the central pivot the candle must close to count as clean. BodyFrac is the minimum engulfing body size. FalseBreakFrac, StopFrac, and RewardFrac control the failure level, the stop pad, and the target distance. BasketSlMoney and BasketSlMoney are the money targets for the whole basket, and lots is the trade size. Now look at the long block. The Boolean broke-up checks two things together. The prior bar sat at or under the pivot plus the break buffer, and the signal bar closed at or above the pivot plus that buffer. When that is true, and the bar is a bullish engulfing candle with a body big enough, the code computes the false break level below the pivot, places the stop a pad beyond it, sets the take profit to the upper pivot R1, and calls open base with order type buy. The short block is the perfect mirror. The Boolean broke down confirms the prior bar was at or over the pivot, and the signal bar closed at or below the pivot minus the buffer. With a valid bearish engulfing candle, it sets the false break level above the pivot, the stop a pad beyond that, the take profit to the lower pivot S1, and calls open base with order type sell. At the bottom, open base is where the order actually goes to market. If it's a buy, it calls trade.buy with the volume, the normalized stop, and the take profit. Otherwise, it calls trade.sell with the same structure. Both sides share that one clean execution path. Let's bring this to life on the chart. You can see three dashed horizontal lines drawn across the price. The gold line in the middle is the central pivot, the PP, sitting at 1.0850. The blue line above it is the resistance pivot R1 at 1.0890, and the green line below is the support pivot S1 at 1.0815. These are recomputed each bar, but we've held them steady here, so the idea is easy to follow. Watch the first few candles. Price is drifting just under the central pivot, with small red and green bars bouncing around below the gold line. There's no thrust yet, so the strategy simply waits. The bar just before our signal is a small red candle, sitting quietly beneath the pivot. Then comes the key candle. A strong green bar opens near the prior bar's close and pushes straight up, its body completely engulfing that prior red candle. Crucially, it closes above the central pivot by a clean margin. That is the bullish engulfing thrust the strategy is looking for, and you can see the buy entry marker print right there as the bar closes above the gold line. From the buy entry marker, follow the next few candles upward. Bulls stay in control, each candle stacking higher, carrying price away from the central pivot and toward the blue resistance line. When price reaches the take profit target at the resistance pivot R1, 1.0890, the trade closes for a gain on the long side. Notice the logic. The thrust through the middle pivot carried to the next pivot up, which is exactly the measured move the strategy aims for. Now the market turns. After tagging R1, price rolls over and starts falling back. The candles turn red and slide down toward the central pivot again. A small green candle forms right near the gold line, and then the mirror image of our first setup appears. A strong red bar opens near that green candle's close and drops hard, its body engulfing the prior green body, and it closes below the central pivot by a clean margin. That is the bearish engulfing thrust, and the sell entry marker prints as the bar closes beneath the gold line. From the sell entry marker, follow price downward. Sellers press the advantage. The candles extend lower, and price travels away from the central pivot toward the green support line. When it reaches the take profit at the support pivot S1, 1.0815, the short trade closes for a gain. Again, the thrust through the middle carried to the next pivot, this time on the way down. One more thing to keep in mind as you watch. If either of those breakouts had failed, if price had popped across the pivot and then snapped back through it, the strategy would not simply absorb the loss. It would deploy the opposite hedge leg and manage the pair as a basket, banking the combined position once net floating profit reached its money target, or flattening if the loss reached its ceiling. On this clean illustration, both thrusts followed through, so the hedge never had to engage. In live markets, plenty of setups don't reach target, and losing trades are simply part of the process. So that's a complete walkthrough of the Engulfing Thrust Hedge Expert Advisor. We saw how it builds floor pivots from raw candles, how a bullish or bearish engulfing bar that closes cleanly through the central pivot signals a thrust toward the next pivot, and how a failed breakout brings in the reversal hedge and basket money management. We also read the actual MetaTrader code for both the long and the short side, and we traced a buy and a sell through a step-by-step chart. Remember, this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.